Welcome back, everyone. After weeks of rejections, multiple failures, and 4 times hitting the wall, Bitcoin has finally broken through $80,000. In the last 24 hours, BTC surged past $82,800, its highest level in weeks. What changed? Iran peace hopes. President Trump says the US and Iran are highly likely to reach an agreement. Oil crashed 6.3% to $96 a barrel. The S&P 500 and Nasdaq hit all-time highs. And the crypto market exploded. But here's the catch: $516 million in liquidations, shorts crushed on the way up, longs caught on the pullback. Today, I'm going to break down exactly what's happening with Iran, why Bitcoin finally broke through, the key levels to watch, and whether this rally has legs. Let's get into it. First, let me explain what's happening with Iran, because this is the catalyst that finally pushed Bitcoin through the $80,000 wall. President Trump stated that the US and Iran are highly likely to reach an agreement. He also warned of intensified bombing if talks fail, but the market is focusing on the positive side. According to US media reports, both sides are nearing a memorandum of understanding involving a ceasefire followed by a 30-day negotiation period. Key nuclear negotiation terms are reportedly softening. Now here's the important nuance. Iranian media denied the reports, stating Tehran is still reviewing the US proposal. Senior Iranian officials described the reported progress as merely part of the US wish list. But the market doesn't care about the details right now. The market sees Trump being optimistic, and that's enough. What Trump said to reporters at the White House: Iran must not have nuclear weapons. They agreed with that point as well. That single sentence sent oil crashing and crypto soaring. Now let me show you how the market reacted. Oil prices crashed 6.3% to $96.02 per barrel. Why does this matter? Because lower oil means lower inflation. Lower inflation gives the Fed room to cut rates. Lower rates are bullish for risk assets like Bitcoin. The stock market reacted immediately. The S&P 500 and Nasdaq both hit fresh record highs. This is the 5th straight weekly gain for stocks. And Bitcoin finally did what it couldn't do for weeks. It broke through $80,000. Let me give you the numbers. Bitcoin briefly surged above $82,800 during the Asian session. That's a 6.37% to 6.9% gain for the week. But the important thing is, $80,000 is no longer the ceiling. It's now support. But here is where the drama comes in. The volatile price action triggered massive liquidations. In the last 24 hours, $516 million was wiped out from the crypto market. Let me break that down. Short liquidations, $291 million. These were traders betting against Bitcoin when BTC broke through. 80,000 and Sagetto 82,800, their short positions got crushed, forced to buy back at higher prices. Long liquidations, $224 million. Then when Bitcoin hit resistance near $83,000 and pulled back, the leverage longs got caught. They were betting on continued upside. The pullback liquidated them. So both sides lost money, shorts lost on the way up, longs lost on the way down. This is the danger of trading with leverage in a news-driven market. But here is the technical good news. Bitcoin is holding above the 50-day and 100-day EMAs at roughly. Let me give you the exact levels to watch on the chart. Current price, Bitcoin is trading around $81,000 after pulling back from the highs. Resistance levels. The immediate resistance is 82,000 to 83000. Bitcoin got rejected there during the Asian session. If that breaks, the next major resistance is the 200-day EMA at $84,018. That's a key technical barrier. Support levels. The immediate support is $76,450, the 100-day EMA. Below that, the 50-day EMA sits at $75,168. As long as Bitcoin holds above these EMAs, the trend remains bullish. Technical indicators. The Relative Strength Index, or RSI, is hovering around 66. That's firm buying pressure, but it's edging toward overbought territory. Not a sell signal yet, but something to watch. Now here is why this rally might have more room to run. The institutional story is stronger than ever. First, ETF inflows. US spot Bitcoin ETFs recorded $1.97 billion in net inflows in April. That's the strongest monthly print of 2026. May inflows are continuing, already $629 million month to date. BlackRock's Bitcoin ETP just crossed $1.1 billion in assets under management. Second, regulatory progress. The White House aims to pass the Digital Asset Market Clarity Act before July 4. That's less than 2 months away. Updates on the Bitcoin Strategic Reserve are expected within weeks. Third, Morgan Stanley is entering crypto trading. The banking giant is piloting crypto trading services on its E*Trade platform. They're charging a 50 basis point fee per crypto transaction. That's 0.5%. For comparison, Coinbase charges around 0.4% to 0.6% for large traders. Morgan Stanley is legitimizing crypto trading for mainstream investors. The big picture from CoinEx research. April revealed the market's new structure. Bitcoin now has a persistent, regulated ETF bid. It's becoming more institutionally owned. DeFi and altcoins remain acutely sensitive to macro shocks, but Bitcoin is building a foundation. So here is my final takeaway. After weeks of rejections, Bitcoin has finally broken through $80,000. The catalyst was Iran peace hopes. Trump says a deal is likely, oil crashed 6%, stocks hit all-time highs. $516 million in liquidations, shorts crushed, then longs caught, both sides lost money. But the institutional story is bullish. Nearly $2 billion in ETF inflows in April. The Clarity Act coming by July 4, Morgan Stanley piloting crypto trading. Iran peace hopes, oil crashing, ETFs buying, Bitcoin finally breaking 80K. This is the most bullish setup we've seen in weeks. What do you think? Will Bitcoin hold above $80,000 or pull back? Let me know in the comments below. If you found this video helpful, please hit that like button, subscribe to the channel, and share this with someone who needs to hear it. I'll see you in the next video. Trade safe. Bye.